The rails of the internet, I would make an argument that it's growing even faster because of the monetary incentives of kind of the economic backdrop of what's going to unfold over the next 5, 10, 15 years. But even out of that context, just saying that it's growing on the rails of the internet means that it should be growing in that kind of upper at least 10%, 10th percentile of all these other technological adoption curves that we see here.
Hey guys, welcome to the Daily Crypto. Today we have Will Clemente as he hammers in on the rate of cryptocurrency adoption, explaining the link between the hash rate and the future Bitcoin price. There are several ways to gauge cryptocurrency adoption. Still, it refers to increasing the number of individuals who acquire cryptocurrencies, invest in them, and utilize them in new directions in their daily lives. Although the rate of cryptocurrency acceptance has surged in recent years, it is still unknown what the future of crypto adoption will look like. According to Will Clemente, cryptocurrencies are now in the innovators and early adopters sectors. In 2013, there were 66 cryptocurrencies. Nevertheless, by 2022, there will be 18,000 cryptocurrencies. All of this happened in 9 years. The number of cryptocurrencies may decline due to competition and natural market forces. Still, the number of cryptocurrency users and adopters is expected to rise as the number of sectors they affect grows. Drop your ideas in the comment section below. Like and subscribe if you love the stuff we produce on this channel. With no further ado, let's get right through the video.
With all technologies, they kind of move through these phases. In the graphic here, we have them labeled as innovators, early adopters, early majority, late majority, and laggards. And so each kind of subset has a different amount of conviction. And you'd say some of the early innovators are perhaps much more forward thinking, more willing to take risk, etc. And that allows them to reap great reward as the technology moves into the later stages of the adoption curve. One thing to note amongst, this kind of takes place for all major technologies, this S curve of adoption. Once these curves pass that 10% threshold, that's where you see really the most aggressive growth. And as we'll get to in a moment, where we think Bitcoin adoption is, I think we're getting ready to hit that kind of main S curve of adoption, but we still are in that early adopters phase. But before we move on to that, we'll continue with some of these other historical technological adoption curves.
All disruptive technologies have a similar exponential S-curve pattern. However, the pace of adoption has increased with time. Newer network-based technologies are being adopted far quicker than the market anticipates. After the early adoption phase, technology reaches the quickest adoption rate, the exponential point of the adoption S-curve. This is the point at which technology begins to get public attention and is recognized by most technologists worldwide. Slowly, then abruptly. When technology reaches the late majority stage, everyday homes and individuals are aware of the notion. At this point, technology has reached saturation, with the only group remaining to adapt being the extremely slow-moving laggards. Laggards are either entities that are too obstinate to accept the technology or have external constraints, such as regulation, that prevent them from doing so. Let us now hear from Will Clemente on these adoption curves.
The rails of the internet, I would make an argument that it's growing even faster because of the monetary incentives of kind of the economic backdrop of what's going to unfold over the next 5, 10, 15 years. But even out of that context, just saying that it's growing on the rails of the internet means that it should be growing in that kind of upper at least 10%, 10th percentile of all these other technological adoption curves that we see here.
Technological disruptions look sluggish at first because a new product has little market penetration until it reaches an inflection point and surges through an exponential growth phase.
For this report, we decided to go with on-chain data for a few reasons. One of which is just kind of our bread and butter and one of the forms of analysis that we feel most comfortable with. The other one is we feel like this is the best way to get hard data on the user adoption. You could do things like look at exchange user estimates. There's some public companies such as Coinbase who discloses their user data, but then we have other private companies that don't have to disclose their user data. And we felt that by looking at the number of unique wallets, that was the best way to have hard data on what the user adoption growth looks like. With that being said, though, this does likely underestimate the actual value by A fair amount. And the reason is because one wallet or one unique cluster of entities that we're looking at here in this graph could actually be a custodian or an exchange. Now, with that being said, though, we do want to just disclose that nuance. But with that being said, we do feel like the number of unique wallets at this time is still a very good proxy for the number of users and a good conservative estimate as to how many users are or have been on the network. So in this chart, we're looking at new entities. So new entities is solely telling you the cumulative sum of all the unique entities that have ever been on the network. And as you can see, that's just over 253 million users that have ever been on the network.
The internet, which exponentially accelerates the dissemination of information, is the primary instrument used to spread the news about Bitcoin. After all, it is a product of the digital domain. Anyone with an internet connection has infinite free materials to educate themselves on Bitcoin. Bitcoin adoption on the internet is equivalent to moving on a superhighway, while internet adoption is analogous to expanding on a dirt path.
Again, this green line is, as Mitch just said, we use the CAGR up until that 10% threshold where we have the data for all the historical adoption curves. We then applied that historical data for the adoption curves that we have to Bitcoin's future projections of what we think we'll see the user growth at, and that's that green line. And then in the yellow, we have the supply issuance. And of course, that's pre-programmed and is already set in stone. So we do know exactly what the supply issuance will be for sure. And so when you plot these two and kind of juxtapose the two, you get this really beautiful graphic, in my opinion, which is kind of a visual for the ultimate bullish case for BTC. And as you can see, we have, an exponential amount of new users that will come in over the next several decades. And we still are in very early days. And as we believe, as we mentioned, we believe earlier in the segment, we think we've yet to hit that real S curve of adoption. And then you pair that with Bitcoin's supply issuance becoming increasingly deflationary, which means, if you combine the two over a long term, it kind of builds the perfect recipe for number co-op over the long term. And so with that being said, I think this is a very simple graphic for kind of illustrating the high level bullish case for a long-term Bitcoin investor.
Investors' pessimism and lack of self-confidence define the bear market in terms of the relationship between user growth and current downsides. During a bear market, investors overlook any positive news and continue selling aggressively, driving prices farther lower. While investors may be bearish about a certain stock, this may not affect the market as a whole. Given that the asset is volatile, let us listen to Will Clemente as he speaks on the relationship between user growth and the actual downward price.
I think what's interesting, I mean, you can go back, if you go back up to this entity's net growth chart, not the cumulative sum, but the one before that, this will illustrate what you're talking about. And as you can see, like obviously in bull markets, that's, as Mitch alluded to, kind of the ultimate marketing campaign for BTC. And when the price is going up, it's the chart before this one, not the cumulative sum, just the raw value. As you can see, like in the bull market, you have more users coming on, but in the bear, that number does decline, although the cumulative value does go up. And that's just because, retail investors, new market participants kind of lose interest, lose conviction, and you get a supply concentration back to those who are highly convicted in the asset class. But, I think over the long term, the trend is clear that you have a growing number of new users, although, kind of based on Bitcoin's cyclicality, the rate of which that's increasing kind of fluctuates a bit.
The hash rate indicates the processing power required by Bitcoin miners to confirm transactions on the network. The increase in hash rate signifies increased network security, a trend that has been solidified in recent years, eventually enhancing trust among potential Bitcoin investors. According to Will, the Bitcoin price increase correlates with its adoption. However, it is difficult to assign a certain value of price per user.
The price going up draws in the incentive for new people to come on and mine BTC. You do tend to see kind of this lag where after the bull run, that's when, because there's a lag between when people order machines versus when they actually can get plugged in. So you tend to see this lag of hash rate coming on after the major price move. That's just kind of how it's gone throughout Bitcoin's history. So I would say, I think they're all correlated. As to your point, I think, the price increasing goes in tandem with the adoption. Although, I think it's difficult to assign a certain value of price per user. And this is something we had kind of flirted with doing, and we're going to do a part two where we're kind of applying this information to a price model. We decided to just leave it with solely the user data. And the issue with that is you can do like a very long-term kind of